Hello, good evening, everyone, or good afternoon, or good morning, whatever time you're listening or watching this video. So I'm finally feeling better, and yeah, let's proceed immediately to the lesson at hand. So we have here lesson 3 of Module 1, the cost, volume, profit analysis. At the end of this lesson, you are expected to be able to examine the relationship between the costs, volume, and profit. Identify what contribution margin is and compute for the break-even points. So what is CVP analysis? Cost volume profit analysis, or the CVP, is a decision-making tool that focuses on the relationship among the volume and mix of units sold, the prices, variable costs, the fixed costs, and the profit. So CVP analysis actually is a way to find out how changes in variable and fixed costs affect a firm's profit. So the cost volume analysis will allow us to identify if mag-change tayo ng variable or fixed, maka-affect ba siya sa profit natin. So companies can use CVP to see how many units they need to sell to break even or reach a certain minimum profit margin. So through CVP then malalaman natin if how much should we sell to break even. So break even will be discussed later in this lesson. So yeah, that's the importance of CVP analysis. We will be able to learn or to know if how many products or how the volume of products to sell kung income bata or dili. So there are certain assumptions in the cost volume profit analysis method. So for these are the assumptions. So these are constant assumptions. First is that costs are segregated into purely fixed and purely variable. So alam niyo na yung anong fixed and variable cost sa previous lessons. Next, the costs behave in linear manner within a relevant range over a period of time. So ang behavior ng cost from variable to fixed is linear ang iyahang behavior or on a straight line. Next is that the units produced is always equal to the units sold. So assumption here sa cost volume profit analysis that the units produced is always equal to the units sold. So there is no change of inventory. And the volume is the only factor affecting variable costs. Hence, variable costs per unit is always constant. So the volume is the only factor na nag-change sa variable cost. So the variable cost per unit is constant regardless of the changes in other costs. Last assumption is that selling price is always constant. So yun yung limang assumption ng cost and volume profit analysis. So now let's proceed to the contribution margin. So contribution margin is the difference between sales revenue and variable costs, or the amount of profit available to cover fixed costs and profit. So here's the formula. We have sales, or the sales revenue, minus variable costs, that is your contribution margin. So if how do we solve the contribution margin per unit? So we have sales minus the variable cost, again, equals the contribution margin. I-divide lang natin siya sa units sold, then that is the contribution margin per unit. We also have the contribution margin ratio, or the ratio percentage na siya. Again, sales minus variable cost is a contribution margin. You just divide the contribution margin divided by the sales, that is your contribution margin ratio. So let's practice. Alibaba Motors disclosed the following information for the month of August. We have sales worth 500,000, direct labor 76,000, direct materials 124,000, and the units sold is 100. Determine the contribution margin per unit, and contribution margin ratio. So we already know how to solve for the contribution margin, right? So you have to first identify your sales, and then you solve for your variable costs, and then that is your contribution margin. So we already know that we have sales worth 500,000. Then the we should identify next what are or ano yung variable cost natin. So we have direct labor, that is a variable cost, and direct materials, that is a variable cost as well. So you add that 500, I mean 76 plus 124, you have 200,000 minus 500, your contribution margin should be 300,000. So yeah, here's your contribution margin, 300,000. So we solve now for the contribution margin per unit. We already know how to solve the contribution margin per unit. That is the contribution margin divided by the number of items sold, or the sales per unit. So 300,000 divided by 100 na nabaligyan na to, our contribution margin per unit is 3,000. And we also know the formula for the contribution margin ratio. So you just have to divide the contribution margin to the total sales. So 300,000 divided by 500,000, our contribution margin ratio is 60%. So that's it. Madali lang yung contribution margin. Let's proceed to the break-even point. Break-even point refers to the level of activity or sales that will yield to zero profit. In other words, it is the level at which the business makes no gain or no loss. So if the business operates above the break-even point, it makes profits. If it sells below, then it incurs in losses. So ang break-even point sa Bisaya is the point on which kung saan tayo mag-break even. Wala tayo income, wala po tayo loss. Kibali, pila ka units kaya atong mabaligya na wala tayo income o wala tayo loss. That is the break-even point. So, the formula for that is that I mean, the break-even point is the point where sales is equal to the total cost. So, where total cost equals total variable cost plus the total fixed cost. So, ang atong formula is for the break-even points in unit and break-even point in pesos. So, break-even point in unit is equal to total fixed cost divided by the contribution margin per unit. And in pesos, we have the total fixed cost divided by the contribution margin ratio. So let's practice. Rainera Corporation produces and sells a single product. The selling price is 30 pesos and the variable costs is 10 per unit. So the average corporation fixed costs is 100,000 per month and the average monthly sales is 11,000 units. So we have to compute for the break-even points in units and in pesos. So from the given break-even points in unit, again, we have to remember fixed costs divided by the contribution margin per unit. So we already know how much is our contribution margin, right? Because from the given, meron tayong selling price na 30 pesos, tapos variable cost is 15. So ang contribution margin per unit is 15 pesos. Kay sales minus variable costs, that is your contribution margin. Yeah, given naman diri ang per unit, kaya price of per unit, yung minus lang natin 15. So, ang break-even point in unit is 10,000. 150,000, which is the total cost, total fixed cost, divided by contribution margin per unit of 15, 10,000. So, ang translation ani or at ang analysis ani is that if we sell 10,000 units, what break even na to na siya. Pag ibaligyan nato ang 10,000 units, kana ato mabaligya break even, wala tay loss, wala pud tay gain kung 10,000. So kung 11,000 ato mabaligya, natay gain. Kung less than 10,000 ato mabaligya or 9,000, natay loss. So, yeah, ito 'yon. Sales, let's say if our sales is 10,000, so 30 pesos per sale times 10,000, 300,000 minus variable cost, that is 15 pesos times 10,000, 150. Your contribution margin is 150 minus the fixed cost of 150,000. Wala tayong income or wala tayong loss. So we are in break even. Next, illustration. Same pa rin to, pero we will solve for the break even point in pesos, and we already know that fixed cost over the contribution margin ratio mo na siya to ang break-even in pesos. And of course, we have to get the contribution margin ratio, that is contribution margin divided by the total sales, or 15 divided by 30, that is 50%. So 150,000 divided by 50%. So our break even point in peso is 300,000. Tama ba? Wait. Yeah, so it's tama. The break even point in peso is 300,000 pesos. So yeah, that's it for the cost volume profit analysis. You just have to memorize or remember how to get the contribution margin per unit and the break even point, the formulas, both formulas, a break even point and the contribution margin per unit. So you have to answer the application problem, which is three problems lang man yun. And I hope you were able to answer that. Thank you.